U.S. Treasuries took down.
Listen up, Rebels. Rebel Leader here, and today we're going to go over the volatility that happened this past week in the stock market and how you can prepare yourself and position yourself to always win. So the first question you're going to want to ask yourself is, why is the market down? And the market can be down for a number of different reasons, from unemployment claims to lofty valuations on current stocks to the big tech stocks losing to rising COVID numbers. Main thing to know is that it's almost impossible to predict in the short term whether the market will go up or down. But I do want to point out here that when people say the market is down, they are referring to three specific trackers that track a bunch of different companies in the market. The three biggest trackers in the US are actually the Dow Jones Industrial Average, S&P 500, and the NASDAQ. Now these trackers and the companies that make up these trackers have come under fire recently in the past year, simply because they're considered zombie companies, they're generally passively managed, and quite simply, the returns have been very low. I'm talking maybe 10 to 20% range over the entire year of 2020. The only reason I bring this up is because we actually do not own the stocks that make up these market trackers. Therefore, when the market is down, we really don't care. And our stocks that we do hold, we're more interested in that, and a lot of times it doesn't follow what the market does. But of course, it's good to know what these trackers are doing because they represent a lot of different companies, and a lot of economists see it as the overall market health. So today we're going to talk about a few stocks that are holding strong within this recent downturn, and this is a big reason of why we diversify. Yes, we always want to hit the big home run, the one stock that's going to take us to the moon, but we also want to diversify our losses across the board. Simply put, when one stock goes down, the others in your portfolio balance it out, and you might not even feel the loss or feel it to a much less degree. For anybody who's been following this channel, you know that I'm big on CCIV. It's been on a rampage recently. Just last Friday, it peaked at $65 a share. We were in this at $13 a share, and it's been steadily increasing. I think it was up like 60% in just last week alone, and there's still a lot of growth. There's actually no confirmed rumors that is partnering with Lucid. It's kind of just crazy. We also have Virgin Galactic doing well, ticker symbol SPCE. We have Revolve doing well, ticker symbol RVLV, and we have ARCG also up this past week amid all the downturn. Another thing I want to mention is because I do hold some cryptocurrency, which isn't necessarily a stock, but it's just another holding, another place you can hold your money in that can grow over time and increase in value. And Bitcoin and Ethereum have also been going up this past week. So again, this is why we diversify. When some stocks of ours go down, I do hold Facebook. That has been down this past week. You have all these other stocks that basically level out your portfolio, if not still increase it. If you guys are new here or new to the stock market, you should know to always buy the dip. This recent downturn will not last. There's so many reasons why the stock market will pick back up over the next week and weeks. For one, there's another stimulus package on its way. Congress and everybody in Washington is coming real close to a deal. We should probably see something next week or over the next 2 weeks, I believe. And literally, the stimulus package are the only thing these senators are good for. I kid you not, Ted Cruz even failed to flee the country last week on his trip to Cancun. Those guys are the worst. Also in the headlines last week, we have the Wall Street Bets congressional hearing where we got to see our friend, Robinhood CEO Vlad, and he basically came out and said all the obvious excuses, not taking any blame, trying to act like he's for all the people of Robinhood, that he won't do it again. We'll see what happens in the future. Will he be held accountable? I definitely hope so. Vlad's main argument was that they didn't have enough capital or enough liquid reserves to back the high volatility of the stocks. If it sounds like it kind of makes sense, that was the entire point. It doesn't really make sense if you look at it in the broader view of the market. There's no way that three stocks could cause a shutdown of an entire brokerage like Robinhood. And then you actually have Keith Gill, who also known as a Roaring Kitty or DFV, actually show up to the Wall Street Bets congressional hearing himself. And what he said is that he still sees value in GameStop. He actually even bought more GameStop, doubling his shares. He, I believe, has over now 100,000 shares of GameStop, which would kind of put his position of GameStop at close to $4 million. In short, we keep holding, we keep buying, we keep holding people accountable. Rebel Leader, over and out.